Hello, listeners, and welcome back to Pie Uncut, the podcast where we dissect the seismic shifts in technology, economy, and finance with the precision of a surgeon's scalpel. I'm your host, and today we're diving headfirst into Apple's electrifying, awe-dropping event from 3 days ago. Picture this. Under the gleaming dome of the Steve Jobs Theater at Apple Park, Tim Cook and his team unveiled a cascade of innovations that could redefine how we connect, create, and care for our health. From the whisper-thin iPhone Air to AirPods Pro 3 that translate conversations in real time, and Apple Watch Series 11's groundbreaking hypertension alerts, this wasn't just a product launch, it was a manifesto on design as destiny. Historically, Apple's September spectacles have been barometers of market sentiment. Remember 2007, when the original iPhone shattered the smartphone paradigm, propelling Apple from niche innovator to trillion-dollar titan and igniting a global mobile revolution? Or 2014's Apple Watch debut, which seeded the wearable health boom amid a post-recession economy hungry for personal empowerment. Fast forward to 2025. With U.S. unemployment ticking up to 4.2% in August and the Fed signaling a 90% chance of a rate cut next week, Apple's announcements land in a world bracing for economic headwinds, tariffs looming like storm clouds, supply chain snarls from geopolitical tensions, and AI hype cooling into pragmatic adoption. Yet, Apple's ecosystem, now powering over 2.5 billion active devices worldwide, remains a $3.5 trillion behemoth, contributing 0.5% to global GDP through its supply chain alone. This event's ripple effects? Profound. The iPhone 17 lineup, starting at $7,999 with 256 GB base storage, holds prices steady despite tariff threats that could add $100 to $200 per unit if unresolved. Analysts project 250 million iPhone shipments in fiscal 2026, up 5% year over year, buoying semiconductors and consumer electronics sectors. But the real wildcard: will these incremental revolutions, thinner designs, AI-infused health tools reignite upgrade cycles in a saturated market where 64% of users see only minor improvements? Or will they fizzle like the Vision Pro's tepid sales? Over the next hour, we'll unpack the market tremors, sector shakeups, sage investor counsel, and a forward gaze. Buckle up, this is Apple in the age of austerity and augmentation. Market impact. Let's cut to the chase. Wall Street's initial verdict was a collective eye roll. But don't mistake short-term jitters for long-term jeopardy. Apple's stock, AAPL, plunged 3.3% in afternoon trading on September 10th, shedding $75 billion in market cap and closing at $234.35, a stark sell-the-news ritual. After leaks dulled the surprise factor, by September 12th, shares had stabilized with a modest 1.82% rebound, buoyed by broader NASDAQ flatness amid weak labor data. Just 22,000 non-farm payrolls added in August, the softest since 2020. This dip echoes 2024's post-iPhone 16 event slide, when AI delays at WWDC 2025 erased $75 billion overnight, underscoring investor fatigue with evolutionary rather than revolutionary reveals. Zoom out, and the economic canvas is more vibrant. Apple's fiscal Q3 2025 earnings, ended June 28th, clocked $44.6 billion in iPhone revenue, a 13.5% surge fueled by pre-tariff stockpiling in China, where shipments hit 19% global market share in Q1, edging Samsung. The September announcements, timed for pre-orders today and availability on the 19th, could inject $50 billion into holiday sales per Counterpoint Research, offsetting a projected 2% global smartphone shipment dip to 1.15 billion units amid consumer belt tightening. Tariffs under a potential Trump 2.0 administration up to 60% on Chinese imports loom large, but Apple's sly pivot shines. The eSIM-only iPhone Air maximizes battery space while dodging physical SIM costs, and steady pricing. iPhone 17 at $7,999 versus iPhone 16's $8,999 for equivalent storage shields margins. Globally, this bolsters a fragile recovery. In Europe, where inflation lingers at 2.4%, the iPhone 17's Ceramic Shield 2, 3 times scratch-resistant, and 3,000 nit brightness appeal to durability-conscious buyers, potentially lifting EU tech imports by 3 to 4%. Asia-Pacific, Apple's growth engine, sees the AirPods Pro 3's live translation as a boon for multilingual markets like India, where smartphone penetration hits 70%, but language barriers stifle e-commerce. Projections? AirPods sales, flatlining at 75 million units in 2024, could rebound 5 to 7% to 80 million in 2025 per SERP, as heart rate tracking during workouts taps the $100 billion fitness app economy. Yet, headwinds persist. China's Q2 2025 demand pull forward from tariffs may crater H2 sales by 10% per IDC, dragging global GDP growth by 0.1% if supply chains snag. Apple's $600 billion U.S. investment pledge, including the American Manufacturing Program with partners like TSMC and Corning, mitigates this 19 billion chips stateside by year-end, creating 20,000 jobs and insulating against 39% tariff hikes. In sum, this event isn't a moonshot but a stabilizer, propping tech indices while navigating tariff tempests. Sector analysis. Apple's blitzkrieg spans wearables, audio, and mobile, each rippling through their silos with surgical precision. Start with smartphones. The iPhone 17 Quartet Standard at 6.3 inches with ProMotion 120Hz, the ethereal 5.6-meter Air at $999, and Pro models boasting A19 Pro chips, 40% sustained performance leap via vapor chamber cooling. Reasserts dominance in a $500 billion market maturing at 2% CAGR. Samsung's Galaxy S25 Edge apes the thin form factor. But Apple's Fusion cameras, 48 np across lenses, 8x telephoto on Pro, and dual capture video edge it for creators, potentially eroding Samsung's 20% share by 2 points. AI integration via Apple Intelligence Visual Intelligence for screen queries, adaptive power mode for battery smarts positions, iOS 26 as the privacy-first OS, countering Google's Gemini and Pixels, doubling premium sales H1 2025. Sector ripple. Qualcomm's modems and TSMC's 3nm nodes see 15% revenue bumps. But foldables from rivals could cap Apple's growth at 4% unless Air's disappearing titanium frame sparks a premiumization wave. Shift to wearables, a $60 billion juggernaut growing 12% annually. The Apple Watch Series 11 $399, SE 3 $249, and Ultra 3 $799 fortify a 50% U.S. market stranglehold. Hypertension notifications alerting 1 million undiagnosed users in year one via optical sensor algorithms trained on 100,000 participants thrust Apple into preventive health. A $200 billion sector exploding post-COVID. Sleep score, factoring duration, and stages from 5 million study nights rivals Aura's rings but at mass scale, potentially hiking adoption 20% among 40-plus demographics where hypertension afflicts 1.3 billion globally. 5G and satellite SOS on Ultra 3 enhance connectivity for adventurers, pressuring Garmin's niche while Fitbit lags on AI. Economic echo. Health insurers like UnitedHealth could subsidize watches, slashing $50 billion in annual U.S. cardio costs. Developers via new APIs, e.g. ladder workouts, fuel a $10 billion app ecosystem. Audio's the sleeper hit. AirPods Pro 3 $249 with 2x ANC, 4x for originals. IP57 durability, and heart rate sensing during 50 workout types could reverse 2025's projected 1% sales dip to 80 million units. Live translation powered by on-device Apple Intelligence bridges languages and calls vital for 7 billion non-English speakers, boosting enterprise adoption in tourism, $1 trillion sector. Bose and Sony feel the pinch as Apple's 60% earbud share swells, injecting $20 billion into wireless audio amid Spotify's $15 billion market. Cross-sector. These launches amplify Apple's services moat. Apple Fitness Plus intelligence subscriptions, projecting $100 billion revenue in 2026, while sustainability 80% recycled titanium, carbon-neutral OPSA lines with ESG mandates, wooing $40 trillion in green investments. Verdict. Sectors thrive, but rivals AI parity demands Apple's next act be bolder. Investor advice. Listeners, if you're eyeing AAPL amid this volatility, heed history. Post-2019 event dips averaged 2.5%, rebounding 15% in 6 months on holiday surges. With Q4 earnings October 30th, focus on iPhone 17, pre-order traction aim for 10 million units in week 1 to signal upgrade vigor. Long-term bulls accumulate on dips below 230, 24/7, Wall St. targets $230 for 2025, modest 4% pullback from peaks. But AI health features could catalyze 20% upside by 2030 as wearables hit $100 billion. Diversify, pair with NVIDIA, AI enablers, or TSMC supply chain bets. Hedging tariff risks. Practical playbook. Trade-ins yield up to $100 off ideal for iPhone 13 Plus owners eyeing Air's 40-hour battery with MagSafe. For retail investors, dollar cost average quarterly. Institutions, watch China's H2 rebound. Risk? If tariffs bite, margins shrink 2 to 3%. Mitigate with calls on AAPL above $240. Bottom line, Apple's moat endures. Invest in the ecosystem, not the event. Conclusion. As the curtains close on Apple's September symphony, we're left with a portrait of resilience amid reinvention, devices that whisper futures while grappling present perils. From iPhone Air's titanium sleight of hand to watches whispering health warnings and AirPods bridging Babel, this lineup isn't earth-shattering, it's earth-sustaining, fortifying a $3.5 trillion empire against tariffs, saturation, and skepticism. Economically, it steadies tech's wobble, promising jobs, innovation spillovers, and a nudge toward preventive wellness in a world weary of crises. Yet, the true awe? Apple's unyielding belief that design fluid, intuitive, human transcends silicon. In 2025's fog of uncertainty, that's the beacon. Tune in next week as we probe AI's next frontier. Until then, keep pulsing with tech. I'm Alex Rivera. Stay curious, stay invested.